Hello traders, and welcome to a new video on arbitrage trading. So in today's video, we're going to be taking a look at an arbitrage tool that was created by another YouTuber after watching one of my videos on arbitrage. He created a tool that allows you to scan instantly for an arbitrage opportunity on Binance. Really cool. And we're also going to be looking at a deeper dive into exactly how one can profit off of parity trading, which is a version of arbitrage trading where we're buying undervalued and selling overvalued assets for an instant profit. If you haven't seen my two videos on arbitrage trading, undervalued, overvalued arbitrage trading, and triangular arbitrage trading, I'd recommend you check those two out before you watch this video, because this video may not make a lot of sense if you haven't seen those two that I'm going to be building off on with today. All right, so let's first take a look at the two tools that another YouTuber named DK Arts had created after watching my arbitrage videos. He created a triangular arbitrage scanner, and he created a Binance parity scanner. So this video is on parity trading, so I'm not going to really go too deep into triangular arbitrage again, but I will show you guys how this runs. You have to have Cores, the Google Chrome extension known as Cores here. You activate that. And let's say I want 10 coins, refresh every 2 minutes. And let's see. And what this is going to give us is instant triangular arbitrage opportunities. So what this means here when it says ask and bid, this is indicating to immediately buy BNB BTC, or we can actually just go with this one. Immediately buy XZC BNB. So buy this rate at this rate right here at 1.08. Then you're going to sell XZC BTC back at the bid at this price here, and then you can convert that BTC that you just gained from that XZC back into BNB, and then you can get a profit of 0.108. Of course, this is going to be changing very quickly every few minutes. So, by the time of this video, of course, this opportunity will not be available. But you can just keep refreshing it if you would like to by just clicking this, then clicking this again, and it's going to give you new. Yep, right here. It's going to give you new triangular arbitrage opportunities over and over. So awesome tool by DK Arts, and thank you for creating that. Now let's take a look at the tool that we are going to be using today for parity trading. So for those who don't know what parity trading is, what we're looking to do is buy an undervalued asset and then sell that undervalued asset back when it is valued properly, or valued at the arbitrage rate of parity. Parity means all things equal. So when there's zero arbitrage actually possible on a coin, that's known as parity. P-A-R-I-T-Y, not P-A-R-O-D-Y. That's a different kind of parity. Yeah. So what we're going to look at today is, let's take a look at parity trading between Ethereum and Bitcoin on many different kinds of altcoins. So I want to be alerted above 2%. Refresh every 2 minutes, and let's do 10 pairs. All right, let's take a look at what we got. So it looks like we actually have some very good opportunities right here. Wow. So what this indicates, and let me just put this scan off so I can explain exactly what it indicates without it changing. Let's take a look at the best one here, NXF. Currently, the last traded price was 2588. Currently, the bid price is 261. And currently the ask price is 264 for NXF. Now, what this is indicating is for us to immediately buy NXF at the lowest price we possibly can and immediately sell it when it goes back up to its valuation. NXS BTC divided by ETH-BTC, this is the same model that we had in the overvalued, undervalued arbitrage trading video before, but this time you don't even have to do it out like, you don't even have to do it out like this. Instead, all you have to do is just go to this site and it does everything for you. Super helpful. And we know that the indicated value is at 2629. So we could potentially buy a 2613 at the bid, or buy a little bit above, and then wait for price to go up to parity and then sell at parity. If we did that, we get a 1.59% profit. What it also gives you is the bid and the ask strength and price. So currently, NXS BTC currently has a indicated bid at 26 2.25 and currently an ask at 2.638, as you can see. And what we also see is that the bid-ask strength in Bitcoin of NXS BTC is currently 0.002, and really we have no offer. What this means for those who may not know what that means is that the bid strength is just the bid at the top of the order book. So the bid that you would immediately transact on. There are currently 0.02 Bitcoin worth of0.02 Bitcoin of NXS that are being bid at this bid right here. And there are currently no Bitcoin being offered, as you can see here. So yeah, so this is really how we use it, but really the more common way that I use it is, instead of just looking for many different kinds of pairs, what you can do is type in a specific pair like this. I'm just interested in HOTF. So if I type in HOTF, then I'm going to find HOTF arbitrage opportunities here. So we can still see the same thing, but here it's saying HOTF is currently at a fair price to buy. Because this scanner does two things. It not only tells you when an asset is undervalued or overvalued, but it also tells you, is it fair to buy? And when I say fair to buy, when you buy a coin, sometimes when you're actually buying that coin, you're buying it at an overvalued rate, because another trader could just put a offer at that rate, sell, and he just made an arbitrage profit. So if you don't want to be, the retail trader who's filling in other arbitrage traders' prices, you just go to this site, and before you enter any kind of trade, you can find is that rate fair to buy. So fair to buy due to arbitrage, not due to supply and demand. So if I want to look at like TRXF, is this one of three things? Unfair to buy, where actually we might want to buy the TRX BTC and then sell it back to F. Is it fair to buy, or is it is the TRXF undervalued relative to TRX BTC? So if we just type in like a random coin here, boom, here we go. Currently TRXF, the base coin's price is above the stable coin's ask price. Good time to sell TRXF. So this is indicating that you do not want to buy TRXF at this current price. It is not at a fair price to buy. It's actually overvalued. TRXF is overvalued. You can just look at any pair like INSF, and I can just hit boom, boom, and boom. We could actually make an arbitrage profit of 0.77%. This is not an instant arbitrage profit. This is parity trading. So we buy something and wait for it to appreciate up to the parity rate. So we can see that this is a good time to buy INSF because the parity value is at 84247, but the current traded value is at 836. So we would make a nice little profit there. All right, so let's go back to HOTF because this is really the pair that I've been arbitraging the most. And we can see that it still is fair to buy. So this is just a tool, and I would recommend just playing around with it more, trying to learn more about it. And I will attach the way to get this tool and the way to access it whenever you would like to in the description below. But now let's take a look at a more complex way of trading parity arbitrage in part 2 of this video. Hello traders, and in this part of the video we are going to be going into common questions that I got about arbitrage trading and also how we can use the Binance arbitrage scanner in a visual sense. So what I have here are 3 different situations that can occur. What would we do in these 3 different situations if they had occurred? So if you haven't seen my second video, Overvalued, Undervalued, Arbitrage Trading, I recommend you check that one out first because that's going to explain a lot more of what this looks like here. All right, so the first thing that you need to do for parity trading is to have one stable market and one active market. A stable market is a market like HOTBTC, a market that just bounces from its bid and offer repeatedly like this. And the active market will be HOTF. That's this blue line right here that just fluctuates over time. An example of a market that we really can't arbitrage directly will be like TRX BTC and TRXF. Well, those 2 coins are both very active. They're going to be fluctuating, in sync of the amount of parity arbitrage that you can make. So that's not really something you can make any money off of through arbitrage trading, through parity arbitrage trading. you need to find one active market, one stable market. Typically, stable markets are going to be the very cheap coins because the cheaper a coin is, the more likely it is to bounce from the bid and offer of its order book. So like MPX BTC just bounces from 28 and 27, which is great for arbitrage trading. All right, so now let's take a look at method one. How do we take advantage of fluctuations within the model? This has to do with triangular arbitrage and less parity arbitrage, but here is one example. Imagine you were here, and I give you three markets, FBTC, HOTBTC, and HOTF. And here, all you have is this model, and currently you're at this point in time, you're frozen in time. What do you do here? What do you buy? What do you sell? And how do you play this market? I'm going to give you guys 3 seconds or just time to pause the video before I give the answer for how to make money or how to make a profit whenever the actual rate, remember the actual rate's the active rate, which is the blue line here, whenever the blue line goes beyond the traded range. The answer is we would want to buy HOTBTC at its offer, which would be here. We would immediately sell HOTF at the current rate of 197, convert that F back into BTC for a profit. To do that, we would make a 0.4.5% instant profit. The reason that works is remember that this range is HOTBTC weighted by FBTC to give us an indication of what HOTF will likely be or is going to be because of parity. Now, whenever we see a coin that is trading out of parity, instant arbitrage is available. And that is why you so rarely see this coin going beyond the parity range. It's really hard for the coin to go beyond. As you can see here, it just basically stays between this parity range. But when you have an example of something like this, what do? Well, we want to buy HOTF immediately, sell that HOTF back into HOTBTC at the bid. So I basically buy 195, market sell HOTBTC at its bid, convert that BTC back in ETH for a profit of, if I got these rates and that FBTC rate, I get a profit about 0.7 to 0.8. So this is just, I'd say, the simplest way for how I can take advantage of mispriced assets within HOTB, within any altcoin to BTC that's stable and its Ethereum rate. Now, the second much more common way that we can trade parity is by buying undervalued and selling overvalued. So what we're interested in here is buying the actual rate, so buying the blue, buying HOTF, whenever HOTF is trading at lower parity, remember lower parity, and this is upper parity, lower parity. Whenever HOTF is trading at lower parity, it indicates a really good buying opportunity. Now you may wonder, wait, HOTBTC is a stable rate, and it seems to be bouncing between one bid and one offer, as it is here. Why is the rate actually increasing or decreasing? The reason that it happens is due to FBTC. Whenever FBTC increases the denominator, the value of the parity range is going to decrease. Whenever FBTC decreases, the parity range is going to increase. So here, from August 9th, 1605, 1645, FBTC very clearly went up. And here, August 10th, 7 o'clock to 7:15, FBTC tanked. And when FBTC tanked, the overall parity range increased. What you can do with this information is whenever FBTC is just tanking, FBTC just keeps going down, that is a really good time to buy HOTF at lower parity because lower parity is just going to increase. Look here. FBTC was decreasing as clearly shown by both parity rates increasing, and the parity rate actually did increase. Parity was at 194. Parity, lower parity went up to 196. So really the bottom range of HOTF went from 194 to 196 because FBTC was going down. So that's one way that you can trade, but by just looking at FBTC and doing it that way. Now, when do we buy at lower parity? When do we not buy at lower parity? When do we sell at upper parity? When do we not sell at upper parity? That is a very common question that I get for those who really create these models. You know, because they see beautiful things like this that would have been. I was actually able to arbitrage this, but this was a really good example of a just really clear market. Price went down to lower parity. Did not go any lower. Price went up to upper parity. Did not go any higher. You buy at lower parity and you just sell at upper parity, and that would have been a 10% profit. Let me just show it here. Yeah, so that's one way you could do. Just buying at lower parity at the lower part of the range and selling at the upper part of the range. The reason why this is a strategy that some arbitrage traders will use on a single exchange is it is very hard for a rate to go beyond parity. For that to happen, if that does happen, an instant arbitrage opportunity is already available. But you know, for that to happen, you would need a substantial amount of market buying for price to even go higher than here. You would need a substantial amount of market selling for price to go any lower than here. It's probably just not going to happen. And that's why I just buy at lower parity and put a stop loss just 1% below, 2% below, and then just sell at any price higher, and then just buy repeatedly at lower parity, sell a bit higher, buy at lower parity, sell a little bit higher, buy a little bit, buy at lower parity, maybe sell at upper parity. You know, buy at lower parity here, sell a bit higher, buy at lower parity, sell a bit higher, and just keep repeating and making a small profit that compounds over time, and then you're doing well. But there's a catch. It's not always that when we buy at lower parity that lower parity is going to remain lower parity. Look here. Lower parity, we have upper parity. We have price just chilling on lower parity, which makes sense. The HOT BTC bid dropped. The HOT BTC bid was actually sold off. So what this means is that as price was fluctuating on HOT BTC between its bid and its offer here, this bid vanished, or order was canceled, or all the Bitcoin there was sold, all the Bitcoin worth of HOT was sold. Then this became the bid of HOT BTC, and this became the offer. When this happens, we are not interested in buying at lower parity because we know that HOTF is likely just to climb down to the new parity range. How do we know when this is going to happen? We look at the order book strength of HOT BTC, the order book strength of HOTF. Order book strength of HOT BTC bid and ask. What's stronger here, the top bid or the lowest ask? I think it's pretty clear that the lowest ask is very, very weak. The highest bid is very, very strong. What's more likely? 174 Bitcoin gets sold or 9 Bitcoin get bought worth of HOT? I think it's more likely that this one gets bought. So because of this, yeah, I am not interested in the slightest at selling my HOTF right here. If anything, I want to buy HOTF if I expect this offer to fall of HOT BTC, because once this offer falls of HOT BTC, if it does, once 11 falls, the new parity range is going to be bouncing from here to here. So this is a spot where we really don't want to sell at upper parity. And here's a spot where the bid of HOT BTC was actually had to be. The bid of HOT BTC was at 11, and the offer at HOT BTC was at 12. The HOT BTC bid at 11 was sold, and price went down. It bounced between 11 and 10. Now, here, we don't buy at lower parity because we may have noticed at this point in time that, you just take a look at the HOT BTC order book, you notice that, the offer is 10 times bigger than the bid. That is not a good sign to buy at lower parity. Same here. You notice here that the bid is, 18 times higher than the offer. I have no interest in the slightest of selling HOTF right now. Yeah, that'd be a bad idea. Because when this bid falls, price is just going to zoom right back up. So that's one thing you can do. Just remember the order book strength of HOT BTC of that stable market, and that's going to keep you protected, from things that happen like this. Because everyone likes buying at lower parity and then just selling a little bit higher. That's why I've made actually a good amount of profit these past few weeks, just buying at lower parity and selling a bit higher because I know for a fact that price cannot go lower. That's impossible unless a large amount was market sold, and then the price would just go right back in the parity range anyway, or arbitrage would be available and I'd make money that way. The only reason it's going to fall is if HOT BTC bid falls, and then I just take a small loss. So yeah, you can always just put a stop loss slightly below lower parity if you would like, and that works too if you want to do something a little bit simpler. I wouldn't be surprised if HOT, you know, when you look at your own chart back when this video has already been posted, if the HOT BTC offer falls, not going to be surprised if HOTF just is up here. Would not surprise me. So a play I could make here, and I could just do it now. I mean, whatever. I'm going to try to buy at 202. I'm going to buy 5F at 202. Not because it's trading at upper parity or at lower parity, but I am taking the bet, or I'm taking a, you know, okay, here's my bid at 202. You can see it. It's live. I'm taking a, I know that it's very likely that the bid here is going to drop. Now, you may notice, well, dude, why don't you just buy at 11 if it's so likely to drop and then just sell on the other rate with triangular arbitrage, right? Not a great idea. You know, that does involve one more fee because it's triangular arbitrage. It's 3 fees. And also, if I bought at 11, that would essentially be buying here, if that makes sense. That would be buying the HOTF adjusted rate here. I would essentially be buying at 204 if I just immediately market bought at 11. But if my order gets filled at 202, which it likely will, unless 203 gets bursted, you know, open, and then we still start bouncing at a 204, 203. You know, if I get filled at 202, then I'm pretty confident that price is just going to go higher. And let's say that bad things happen and the HOT BTC offer just gets a little bit stronger, then price is just going to likely go down for HOTF, and I'll just take a small loss. But yeah, this is just looking at the order book here. There is a mathematical way to do this, and this is where it gets a little bit complex in the third method. I'm going to show it though. You take the larger bid or offer, you divide the smaller number by the bigger number, and then you weight that to the parity range. 9.4 divided by 174. So let me show that. Just a quick little thing that I came up with. You guys don't have to do this at all. What's the parity range at? Parity range is trading between 205 and 186. That is a difference of 19. So I'm going to multiply this by 19. That is 1. So I'm expecting that the ETH rate is currently should be trading at fair value at about 1 to 2 below the indicated parity rate. The indicated parity rate's at 204, 205. Currently the price is 1 to 2 below at 203. Yeah, and you can do this for any coin, really. Just like, let's say I wanted to look at, you know, let's just look at Dent. You know, if I was to look at Dent, I would look at the bid. I would look at the offer. Right now, it looks like the offer. It looks like the offer is about, the bid's about 8 times stronger than the offer, and I would just use that to look at the Dent ETH rate. I'm really not going to be surprised if, you know, I could just, I'll just show it here to make it a lot clearer instead of just talking about it. So this is Dent. I am pretty confident that because the bid is so much stronger on Dent BTC than the offer, I'm expecting that Dent ETH is probably somewhere around here at the top of the range. I don't know what the Dent ETH range is, you know, Dent ETH rate is. Here's my phone, my computer. I'm not seeing anything else. I promise you I'm not seeing Dent ETH. But let's just take a look at what Dent ETH is at. 555. Let me just overlay that onto the chart here and see if my prediction was correct. I'll get rid of the percentage. And yeah, it was correct. Not surprised. Dent ETH is trading at the top of parity here. I mean, that's to be expected, of course, because the offer is so weak on Dent BTC and the bid is so strong on Dent BTC. I know that between the parity range, that Dent ETH is going to be at the upper side of that parity range, you know, and I could do this for any coin. I could look at let's just do MPXS, you know, another one of the more stable kind of coins. Divided by FBTC to get a parity range. Let's delete Dent. And let me just look at the MPXS order book to try to guess, really, where is MPXF likely to be. We know that the bid is about twice as strong as the offer. So, because the bid is twice as strong as the offer, I'm expecting that MPXF is probably trading somewhere around here at the upper side. All right, let's add MPXF. And you can see, let's just get rid of percentage because that's not helpful. But yeah, it's trading at about the halfway point. That makes sense. I was expecting it to trade a little bit higher because of the order book strength, but you can see that it's trading at about where I was expecting, around the midpoint to the upper range here. So yeah, that's basically it for just the three different kinds of ways that you can trade arbitrage using a parity model. Just to go back to HOT BTC, just to end this video on the rate that I actually just submitted an order on. Let's just get back the, here. Let's get back this. I'm going to overlay on HOTF. Okay, HOTF. And we can see, yep, it's still bouncing probably around like 203 and 202. But now let's get in, let's take a look at HOT BTC, and let's take a look at HOTF. HOT BTC bid is still, the HOT BTC offer is still very weak, and I'm hoping that HOTF, let's see what's going on here. Yep, so just the same old, it's going to be bouncing between 203 and 202. And once I buy at 202, I'm just going to have an easy parity trade of, once this bid falls, I'm just, I buy at 202. Once this bid falls, I can just sell at any part of this parity range here and make a profit. And if, like I had said, if bad things happen and this offer begins to become a little bit stronger and it's more likely the price is going to be contained in this parity range and I'm actually buying at upper parity, then I'll just take a small loss. Probably I'll sell at about 200 would be fair. So at a 1% loss. So I'm risking about a 1% loss if, of course, if the offer becomes much stronger, which it probably won't. I'll take that loss to 200 and I'm going to probably make a profit somewhere in this parity range, about there. Yeah, that's it for this video for just complex arbitrage, fun, and shenanigans. If you have any questions or would like to go a lot more in depth in, in how to do arbitrage, I am going to be doing a group mentoring, the first of its kind on my channel. I'm going to be doing a group mentoring session on arbitrage, and I'm going to be putting out 3 spots for that if you want. I do offer mentoring, so if you check out my website, you can go take a look at that. But what this is going to be is group mentoring is basically just be looking at arbitrage, and it's going to be half the rate of individual mentoring. So instead of 50 for a half hour, it's just going to be 25 for a half hour for 3 people. So yeah, if you want to learn arbitrage trading and want to do a group mentoring session, then click on the link below. Have a good day.